there, it's Crystal Powell with Remax Jazz, and today I'm joined with Sherry Corbitt, mortgage broker with mortgagesindurham.com. So, Sherry, as we all know, the Bank of Canada increased interest rates today. So, what does that mean for the average consumer?
Well, first of all, you shouldn't lose your mind over this. It was a
Don't panic, mechanic.
Don't panic. It was a 0.25 increase, which is what we suspected. And in the history of variable, it's only ever gone up a max of 0.25. So all that fear and doom that some people were speculating, oh, it's going to go up a whole percent. The economy, that just doesn't make sense. The economy can't handle that. So it went up a 0.25. So on the average mortgage on a biweekly payment, it would be a difference of $6 per $100,000. So if you have a $400,000 mortgage, then that's $24 extra biweekly. So you're not going to lose your shirt, and it's still way cheaper than it would be on the fixed rate now. So fixed rates, if you were to call your lender and say, I want to go from variable to fixed, I don't like this anymore, you're probably looking about $319 to $329 on the fixed side is what you're probably going to be offered to lock in, versus your variable. If your variable right now, I don't want to quote anybody's variable, but if your variable is about 1.5 and you're going up to 175, still way cheaper than that 319, right?
Yeah.
Don't lose your mind. Chill out.
Yeah. Well, and a lot of people are like, oh my God, what's going to happen? Because they're saying that they're going to increase anywhere from 2 to 4 times over the next year. Is that correct?
Again, that's coming from the media, who is very good at shouting things. So this morning I looked at the last 14 years that we've had the variable rate. So from 2008 to 2022, I looked at the last 14 years. And in 14 years, the variable rate has gone down 14 times and has slowly come up 9 times. And one of those 9 times, if you can believe it, I don't even understand this, it was on March 2nd, which is timely, 2009, they increased the rate by 0.01. Like, I don't even know why they did it. That makes no sense to me. Why they would
just to remind people that they're there.
Right? It's like, oh, hey, we better do something. The media said we would. So here, have your 0.01 increase. So keep that in mind, that in 14 years, it's gone up 9 times, which I don't even think you should count that one time.
Yeah.
I don't even get that. That just blows my mind. So will it go up quickly? Okay. Do you think in this economy and where the world is right now with COVID and politics and everything that's happening, that our economy can afford to have all these increases that are being predicted? It just can't. It just can't. We're just not, a global economy is not strong, and the variable rate is tied to the global economy. And the global economy, I don't mean to say it, but it's a bit of a shit show out there. So
absolutely,
I do not predict the rates going up. I think it's going to stay here. This is my prediction. It's going to stay here for a while. It's going to test the grounds. I don't think it'll go back down. And I think there'll be one more increase, but it'll be in the last quarter of the year.
You heard it here with Sherry Corbitt. So
you're hearing it here.
Yeah. Fixed or variable?
Absolutely variable. Yeah. So even today with the rate increase, if somebody new walked in the door and I was dealing with them and we were looking at the 5-year term and we're looking at 319 versus, I'm going to assume I'll get the new rate sheets tonight, 1.8, I would totally take the 1.8 all day long. And I wouldn't even sweat if it goes up another 0.25. I wouldn't sweat if it went up, even if it went up a whole 1%, that would still be 2.8 versus starting at 319. That doesn't make sense to me. The other thing about variable, a little bit off topic, but because your listeners are interested in variable, when you go to break a mortgage, if you have to break your mortgage because life happens, life is variable, your mortgage should be too. But if something happens, you have to break it, it's 3 months interest.
Yep.
If you do fixed and you have to break it and you're 2 years in, 3 years in because you're going to move or you're going to upgrade or you're going to downgrade or you're moving provinces, whatever the situation is, your life changes, you are facing a much, much bigger penalty. And I'm going to say it, nobody says it, but I'm going to say it. The banks make the most money sheerly on profit on penalties. Penalties is their absolute cash cow to them. So of course the banks are like, go fixed, because statistically over 60% of people will break their mortgage and will pay a penalty. And the banks are going, yeah, be fixed because I want you to get a penalty. Give me a fat penalty.
I love that. Life is variable, so your interest rate should be too. I love that. Okay, well, thank you so much for chatting. If you have any questions, you can find Sherry at mortgagesindurham.com. And once again, it's Crystal Powell with Remax Jazz, and we'll talk to you soon.